Interviewing Mark Collinsworth of Vere Global once again. And Mark, before we get to the new trade war with China, how did Wall Street do this week, and how did it close today on Friday?
Well, the stock market actually closed slightly up today, but the market actually lost about 2% for the week, but at one point was down 5% on the week. And of course, that was from a assortment of different things. Federal Reserve chairman saying that the economy has a lot more downside risk to it. You had two very, very famous hedge fund managers come out and say that they were very concerned about the stock market, and that led to a lot of volatility.
So, where does this leave us in what direction the stock market is taking?
Well, one of the funny things, I talk to people and they talk about how much the stock market's gone up in the past month, and it's kind of an illusion. If you'd actually bought the S&P 500 back on April 14th, well, guess what? You're actually negative right now. So over in a complete 4-week time period in the stock market, you actually have lost money. And as the old saying on Wall Street goes, before a stock market can go down, it has to stop going up first.
So, therefore, we have not yet seen the bottom.
I do not believe so.
And therefore, what are the prospects for the months ahead, or at least for the next few weeks ahead?
Well, right now we're getting into what's called sell May go away. Historically, from a seasonal standpoint, the period between May and the end of October historically is the worst performing 6 months of the year. And we're starting to enter that right now in a time period where the stock market's got a lot of bad economic news coming out. Today, retail sale numbers came out, had a 16% decline. Industrial production numbers have come out this week. Worst decline ever in history. So we're starting to get these bad numbers coming out in the time of the year where the stock market traditionally goes down anyway.
Will that pass?
Which aspect?
The stock market is going down. We haven't hit bottom yet. This is traditionally a bad time for the stock market. So therefore, is it a passing phase?
It is a passing phase. Something that is very interesting is if you look at all this liquidity that the stock market, that the Federal Reserve has pumped into the stock market here, people all have done all these studies where they've looked at how long it actually takes for that liquidity to hit the stock market. There's usually about a 250-day lag to the liquidity. So if you go back 250 days, you can basically gauge based on the direction of the M2 money supply liquidity. You can basically gauge where the stock market's going to go over the next several months. What's very interesting is if you go back 250 days right now, liquidity or M2 money supply was actually declining this time last year. So that means that the stock market, based on that 250-day time period, should start to decline here in the next 2 to 3 weeks or peak out in the next 2 or 3 weeks. Now, that's the bad news. The good news is all the liquidity the Fed added back here in March, if you go out 250 days from that period, which would put you around November, December this year, that should help out the stock market a whole lot. But it's kind of ironic that 250 days ends at the end of sell May go away as well.
So therefore, your projection for the next few months is what?
I think Wall Street has really overestimated the speed of the recovery, and I think they're going to get a wake-up call here in the next month or so when they see these economic numbers continue to get worse. I'll give you an example. Jobless claims numbers came out out yesterday,
right.
And Wall Street was very surprised that the numbers are actually getting bigger. By this time, they thought people would start going back to work with the reopening of the economy, but that's not happening. They're still losing jobs as we speak right now.
Why did Wall Street think it was going to be better at this point with the reopening?
Well, the theory is that a lot of these businesses closed down just for the social distancing thing, and now that we see the economy starting to open back up and businesses starting to open again to have clients come in, they thought these people that were fired or laid off would automatically get their jobs back, but they're not. And I think the reason behind that is there's a lot of businesses that just couldn't survive the 6 weeks of social distancing, and those businesses are completely shut down, and those people don't have a job to go back to.
Plus, Mark, another factor to consider is, I presume, that even when people start going back to work and start coming out again to buy things, there's less money to buy things with, so that will be a continuation of a deflation of the economy, correct?
That is correct. One of the things at Wall Street is also the perfect example today was the retail numbers. People thought with all these stimulus checks coming out, people were going to go and buy, Nike shoes and furniture and all this kind of stuff. No, they used that money to pay their mortgages. So that money never went into retail, like buying, fun stuff. It went to buying basic necessities. And Wall Street kind of got a wake-up call on that this morning, that what they thought was going to happen didn't actually happen.
You'd think that the gurus on Wall Street would anticipate something like this. How come they didn't?
Well, the gurus on Wall Street, the guys that make a lot of money, they won't touch this market right now. They say there's just too many problems. Give you a perfect example. One of the things that kind of shocked people on Monday of this week is Warren Buffett held his annual conference call, a shareholder conference call over the weekend.
Right.
And what really shocked people is people went into that meeting think, well, gosh, the market dropped 38%. Surely the world's greatest investor took that 50% cash he's sitting on, or 120 something billion dollars. Surely he went out and bought some stocks with it, right? Stocks have to be cheap. No, he sold stocks, raised cash, and actually took losses on positions, which is very rare for Warren Buffett, because once Buffett buys, he holds them forever. He never takes a loss. But yet he was so concerned, he decided to take losses, not buy stocks, and add additional cash to his portfolio. And when asked why he didn't buy stuff, he said, because I couldn't find anything attractive. Think about that. World's greatest investor sitting on 50% cash, can't find anything attractive to invest in with a 38% decline in the stock market.
Wow, very telling. Now, additional factor, the new trade war with China. How's that going to affect the economy?
Well, that's just now starting to heat up. China's caught a lot of heat from a lot of different countries, the United States being one of them. They're thinking about, putting sanctions on China to punish them for going so long without telling anyone that this coronavirus was breaking out. So, like today, there's talks about that they're not going to buy any semiconductor chips from that region of the world, and that companies that do business in there are going to be forbidden from buying products from that. One of the big semiconductor companies, Iowa, it's going to be, potentially could be banned from doing any business with the United States. And of course, companies that do a lot of business, like Apple was down today, that stock. Qualcomm, which is another big microchip provider, was down about 5% on the day. And it's just a punishment against China. And I'm very curious to know what's going to happen, because in the past here, whenever the United States has threatened some kind of sanctions against China, China always waits to do it over the weekend to announce something. So I'm going to be very curious what comes out of China here in the next 48 hours.
What do you think they might announce as a strategy to counteract this?
Well, one of the things they did just hear about last week was Australia was actually just asking a whole lot of questions about what was happening with this coronavirus with the Wuhan laboratories.
Yeah.
And China basically came back and said, hey, if you don't stop all these questions, we're going to ban all beef purchases from the country of Australia. So that got the Australian stock market took a big hit on that, just from them threatening to ban beef purchases from the country.
He who has the gold makes the rules, right? The golden rule, and now China has the gold.
That is correct. They have a lot of power, and they're not afraid to use it.
Is Trump going to be in any way successful in reversing this course of production in China? And, will the sanctions have any effect on that, and how soon?
Usually when you change, I think businesses have realized they don't need to rely so much on a particular country to build factories for manufacturing stuff. So I think you will see a pullback with countries trying to diversify their manufacturing capabilities. Just this week alone, Taiwan Semiconductor, a huge semiconductor company from Taiwan, announced it was going to build a $10 billion semiconductor plant here in the United States. So you can see small changes starting to occur, but one thing I've also discovered, when you start having these kind of changes, they don't happen over the course of months. It usually takes, years and years and years to really see these changes take effect.
Yeah, that was going to be my next point, that, this doesn't happen instantaneously. Once the horses left the barn, it's too late to close the door. So, to bring them back, they need incentives. I mean, how do you convince these multinationals to bring production back stateside when it's still much, much cheaper abroad?
Well, one of the things, even though it's cheaper, well, I think a lot of these companies have realized they couldn't do any business because all their employees in China were basically, barred from going to work. So I think they're going to diversify a little bit from that. But, a new problem that's going to start taking effect here in the next month or two is people are going to start looking at the elections and how the coronavirus is going to affect the elections. I've heard predictions, behind the back rooms that if the economy doesn't start to make a huge rebound here in the next, month or so, the Republicans could stand the chance of losing the Senate and losing the White House as well. So that's going to be a big problem that's going to affect us, because Wall Street doesn't like to see a presidential change. They really don't like that.
Yeah, unless Trump convinces the public that it's not his fault, it's the fault of the Democrats for shutting down unnecessarily the whole economy.
Correct, and that's also another thing that came out today with, there was an interview with Joe Biden, and he was talking about how there's like millions and millions of people have died from the coronavirus, and how 85,000 people have lost jobs here in the United States over the past, 6 weeks. Well, only about 200,000 people, I think, have died so far from the coronavirus, so that was completely wrong. And him saying 85,000 people have lost their jobs in the last 6 weeks, that's wrong. It's closer to 36 million. So Mr. Biden has a huge disconnect from what's really happening, and I have a feeling that once we get going into the elections, he's not going to have a chance to get on TV with rehearsed answers, and he's going to go up against Trump. And the second Biden says something about 85,000 jobs are lost, I'm just going to have a box of popcorn and a Coke ready to listen to how Trump responds to that one.
Enter Governor Cuomo.
I've heard that. I don't really think he wants to get involved in politics at that level. I think he's very happy where he's at right now.
I don't know. We'll see how that turns out. I mean, it seems more and more probable that they're going to replace Biden either before the election or maybe even after if he becomes president. But, if he continues with these mental deteriorations, which is what some people are calling it, I don't know for sure. But, the type of performances he's giving, if that continues, I don't see how they could sell him to the public, or if he becomes president, how he could stay president.
Well, I'm sure you saw this week in an interview, he actually told people not to vote for him.
Did he?
Yeah, you've seen the stuff with the sexual harassment charge.
Yeah.
He said, if you believe the sexual harassment charges, just don't vote for me. So that's kind of,
Yeah, you never give a suggestion like that, because some people might pick you up on it. Yeah. But, I'm curious now, you mentioned a Chinese company. Was a Chinese company building a plant here?
It's from Taiwan. Taiwan, technically, there's still some debate. Is Taiwan a separate country, or is it still part of China? The United States always basically gives missile systems, because China always threatens on taking Taiwan because Taiwan's part of its country.
Right.
So it's technically Taiwan. It's just a lot of debate. Is it still part of China, or is it its own independent country? So,
right.
But with that being said, when the Chinese start threatening stuff like that, you have seen a very large increase in military activity with ships and stuff going into that region here just in the past 10 days. So we'll see.
Yeah, that's something else.
Gold is taking off.
That's something else that's building up. Yeah. First, we built up China economically, then they built themselves up militarily with the money they made off of us, and here's the situation we're facing today.
Yeah, and it's kind of funny. There's actually a saying in the military, with our friends, we find a country, we feed them, train them, finance them, and then 5 years later we start a war and kill them.
Yeah, or eventually they get us, such as what happened with the Roman Empire. After they let the barbarians in, first as mercenaries, and it's kind of like citizens, and eventually, how it went downhill from there, if that comparison is valid. But again, this Taiwanese plant coming here, why would they do that? I mean, economically, what's the incentive?
I think, part of the incentive is, the United States, one of the interesting things about the United States, and that's the same reason whenever you see financial crisis occurs any place in the world, people always flock to the United States. And a lot of it is because we have the strongest military by far in the world. So if you want your plants to be protected, if you want to invest, you want to have it in the United States, because no one's going to top the United States. And it just also goes back to this. you always hear about the United States talking about how they're trying to pass legislation to prevent people from putting money offshore. The Cayman Islands,
Yeah.
Bahamas, Cook Islands, Switzerland, Isle of Man, and they pass all this legislation to stop people from putting money there. But the interesting thing is the United States is the largest offshore entity in the world. More people from more countries around the world put their money in the United States to hide it from their governments than any other country in the world. But yet the United States never tries to do anything to enforce the laws they pass against the Cayman Islands. They refuse to enforce those exact same laws in the U.S. borders.
Do you think perhaps it's because there's too many people of note and politicians who may have accounts in the Cayman Islands?
Well, they want that money here. If you have all that, where capital flows, there's what's called in economic theory called the milkshake theory, and your countries that have the theory is the countries that have the most capital that flow into them historically in the world of investing remain the strongest. So if you leave all those laws open for people to bring money in from Europe and Germany and so forth in the United States, according to the milkshake theory, the United States should be financially the strongest country in the world as long as people keep bringing their money to the country.
That gets us into the area of whether the dollar is going to remain as the reserve currency. How do you see that?
As long, right now you can't buy oil unless it's, some dollars. All oil is traded in dollars. And that's one of the reasons why it's the reserve currency. Until you have a competing currency that they can buy oil in euros or yen or something like that, the dollar's always going to remain in that position. So with that being said, though, I do see the writing on the wall that at some point down the road, the U.S. dollar will not be the reserve currency. But will that be here in the next 2 or 3 years? Unlikely. In the next 10 or 15 years? Very likely.
Really? Very likely.
Yeah.
Then what?
Yep.
Very likely, and if it happens, then what?
The dollar will plummet. And it may actually even occur sooner. One of the things, the Fed's done a lot with, adding liquidity to the stock market to try to get the economy going. The last thing that the Fed would probably want to do without shaking the boat too much is actually decrease the dollar. Because if you can devalue the dollar, then hopefully countries like Europe, Africa, Australia start buying more U.S. goods, and that's a good way to jumpstart the economy. So the Federal Reserve actually has a very large weapon to jumpstart the economy, and that's basically by devaluing the U.S. currency.
So you're saying, let me see if I got this straight. You're saying that it is very likely within the next 10, 15 years that the dollar will lose its reserve status.
That is correct. And one of the main reasons behind that is, just this week, we are now at over the Federal Reserve's balance sheet has $7 trillion on it.
Yeah.
We're trying to pass another $3 trillion stimulus package. At some point, the level of debt that the United States has, there has to be a day of reckoning. We have to pay the piper at some point. And of course, like I said, that might be another 10 or 15 years. But the day we start paying the piper, I really don't see there being that much demand for the dollar to be the reserve currency anymore.
And once again, if that occurs, then the whole economy is shot. It's not recoverable, the U.S. economy.
It's recoverable, but like they say, the future is not what it used to be. I think our standard of living would probably decrease, but I still think the United States would still be the most powerful country in the world.
Well, that sounds like something of an optimistic note after all this dire news. So.
Well, I say that optimistically, but it's also it's kind of like owning the best house in the worst neighborhood. The United States in that case would be the best house, but look at what you have to compare it to.
Yeah, but still, so it'd still be kind of like a safe haven then.
The United States will still be a safe haven for a fairly long time. It's a lot of the countries around the world. Look at Germany. Germany's been at negative interest rates for 6-7 years now.
Yeah. So it will continue, even in diminished form, to be a safe haven for foreign money and foreign investments here, which would keep the dollar somewhat propped up, even if it's not the reserve currency, is what you're saying.
Correct. Just because our interest rates are so much higher than, like I said, right now, if you buy a 10-year Treasury bond in Germany, it has a negative 0.5% interest rate on it. At least if you buy a 10-year U.S. Treasury bond, at least you get a positive 0.6 out of it.
All right. Mark Collinsworth of Vere Global, thanks very much for being with us once again to give us some more alarming and somewhat hopeful news. Mark, thank you.
Anytime.